It takes us to our talk of the tape, all that continues to rally, and if it's a sign that even more gains are on the way. Let's welcome in PIMCO's Erin Browne. She's here at Post 9, as we said. It's nice to see you on the East Coast.
Nice to see you as well.
Been a while. It's good to have you here. This everything rally has been pretty amazing. Does it continue?
I think it does. As we heard from the first quarter earnings season, it was a strong earnings across the board. I think what's really important to keep in mind is you're now seeing an inflection and broadening out, not just technology leading in terms of the earnings recovery, but it's broadening out to more sectors as well. Yes, we're trading at highs on the Dow or close to highs on the Dow, same across most indices. But I think what you'll see as we move through the rest of this year is that this broadening out will drive more flows into the equity market and start to see real participation from more of the cyclical sectors of the economy. What I think is really encouraging over the last couple of weeks has been to see the metals, the mining, the industrial companies now starting to really lead. And we're starting to see that, I think, be more of a driver, into the second half of the year.
I mean, over the last 6 months, to your point about the metals, right? Copper's up 32%, silver 36%, gold 22%. Which parts of the cyclical trade do you really want to lean into? Because all parts of that are not necessarily created equal.
Exactly. And so the precious metals certainly have done well. Copper has been very much an AI story. Gold has been, I think, driven by some flows out of other safe haven currencies into gold. But what I think now we're starting to see is more of the industrial metals start to inflect more positively. Some of that's on the back of a thought that China is now bottoming out. They're starting to lean more heavily into infrastructure investment because property sector is continuing to lag. And so you're starting now, I think, to see more of a real play for the industrial metals and commodities. And I also think that it lends itself to the industrial companies as well. So I think that's where the next leg of this trade is going to be. Not to say that the precious metals and the copper will lag, but I think you're going to see more participation from the industrial metals as well.
Not surprisingly, we do have year-end targets going up seemingly by the day. When you're at 5,300 and change on the S&P, you start to get targets ratcheted up, maybe 5,500, 56, 57. How much more do you really think is possible this year for the S&P?
So I think mid-single digits is likely possible this year, but certain sectors I think can really do quite well. I believe going into the end of this year, even if you get 5% up on the S&P 500, which I think is a reasonable amount to further go, just given sort of the progression of earnings, you're still going to see the quality, the large caps, I think, outperform. I think the small caps are still really hindered. And so while, yes, you're going to see 5% on average, there's going to continue to be that bifurcation in the market.
It was pretty eye-opening when Rick Rieder was here, BlackRock, of course, last week, and suggested you could do 10 to 15% more this year because earnings are underappreciated and some of the benefits from higher rates on a certain cohort of investors and spenders. When you hear calls like that from somebody at a shop like that, do you think that could be possible?
It's certainly possible. I think that the challenge is that we've come a long way in a very short period of time. I do think that there's going to be some consolidation before we get sort of a strong back half rally. And I also think that, we're at a point now where the consumer is weakening.
Parts of
the consumer are weakening. The luxury, the large cap, the sort of upper tiered consumer companies are doing quite well, and I think they're going to continue to maintain that leadership position. But you're starting to see weakening on the middle and even especially on the lower end consumer, and so that's, I think, going to somewhat halt at a 15% upside from here. But that doesn't mean that certain companies couldn't, gain 15, 20% from here. I think that that's very possible. You really have to be more careful about picking your spot.